Markus, the best.
So here we go, guys. Let's try it one more time. And the audio from the floor today is not the best, but now we can hear you, Pete. And I want to dive right back in because our time is limited. So you were one of the few traders on the floor today witnessing the IPO of DoorDash. What was it like?
So even though we do have obviously a skeleton crew here due to the virus, and that the community is trying to be as protective as possible, the price discovery process of the IPO, which the stock exchange is so spectacular with, did not change in any way. The energy was there, the process was there, the people were there to the best of our ability, and obviously it opened smoothly, and obviously there is an absolute, the world is striving to get involved in the IPO process and in all the new stocks. We've seen that throughout the year, that there's a thirst for great new stocks, whether they're actually profitable or not. The companies that are going public have been great. Can you hear me?
Yeah, I can hear you fine, but I mean, yes, the appetite is great, but you know, I was looking at the data and it looks like DoorDash at some point today at the high of the market was worth as much as Chipotle Mexican Grill, Papa John's, Domino's Pizza and Shake Shack combined. Now that makes absolutely no sense, no?
Okay, so yes, and it's funny when you put these numbers together, and we've seen that. We saw it with Uber. We've seen it with a number of companies that are not even profitable and weren't after their IPO for many years to come. That it's a matter of how hot the sector is, or how especially within the pandemic space, how pandemic friendly they are. Sometimes it kind of breaks down all kinds of common sense, right? It's a matter of the whole concept of an initial public offering is where the public feels there's value. Many stocks without profitability have been valued at levels that are unbelievable. I have to admit, today, this was completely out of control. Not out of control in the way we handled it and the way we opened it, because it was opened well and it traded well around that. The whole IPO process, if it's opened well, you're building a house, you're building a foundation. So where it opens, how it opens, and the information and transparency are what keeps the stock trading correctly. You're absolutely right. At $200, at $180, it is absolutely completely nuts in a lot of ways. But the bottom line is that we're talking about where the public feels they have value. There are traders involved, there are investors involved, and the investment community. Some people traded the stock today. Some people invested it for the long term. I would think as a long-term investment at $180 with that incredible valuation, it could be a bit frothy. It's cappuccino at best. However, the stock opened at 182. It dropped down quickly to 163. It was a knee-jerk reaction when, because the book tends to get thin after the opening. The stock rallied back to the 180 level and traded between 175, 185 for so much of the day. It ended up closing at 189 and change. There were huge volume turnover, right? Virtually, I would think more than the flow. Let me go look at the stock. It's so funny. We had 25 million shares traded on the day in here in New York, right? So 33 million share was the offer. It was priced at 102. It opened at 182. The low was 163.80. The high was the close at it actually got to 195.50 at one point. I'll actually give you a nice look to see where it is. We got plexiglass blockers here. There's the stock behind me.
Yeah.
And, it's the bottom line is it's where people are willing to pay. This is real money. This is real money. These are real people buying and selling the stock.
Well, I mean, as
trading vehicle.
Well, as Gordon Gekko used to say, greed is good, and I think we're definitely seeing froth in the market, looking at the valuation of DoorDash on this level, and also seeing, it almost doesn't matter what the companies are, you just buy anything, right? I mean, look at C3 AI. That stock today was up 165% at some point today. If that's not froth.
Let's talk about that for a minute. Same thing. They were traded side by side. I bought stock in both of them, and they were an amazing trading vehicle for the day for traders. People made a lot of money in both of them. The C3, the AI, which is the symbol, right? Apple IDA, right, was priced at $42. They left a lot of money on the table. I can show you that one too because it's right behind me. I don't know if you can see it, but it opened. The pricing was outrageous. There was huge volume to buy. At some points, we had 1 million shares to buy with absolutely no limit and no sell side. They inched their way up. The first indications were in the 50s and 60s. They inched their way up to 99. It ended up opening at $100, ran to 115. And because it had broken through the 10% level of level up, level down, they had to stop trading for an imbalance to go higher. And then the stock retraced. It ended up closing at 92.5. So go ahead.
I'm looking at the comments here from the community. Ich schaue mir eure Fragen hier an, die hier runtertackern und nehme gleich noch mal ein paar Fragen dran. But I want to stick with DoorDash for 1 second because you're saying, well, that's real money. In my perspective, we're seeing a real transfer from risk out of Silicon Valley to retail investors. I mean, keep in mind that DoorDash today at a valuation of close to $80 billion, to justify this valuation, they need to have 120% of market dominance. Not even 100% of the market. They would need 100%, 120% of the market share to justify this valuation. In a market environment that is very competitive with Grubhub, where they're renegotiating rates from restaurants, where COVID-19 hopefully next year will not be the dominating story anymore. Growth will decline in the next coming years. And boom, the institutional investors go out and say like, hey, retail guys, mom and pop investors, go buy the stock. I mean, Masa Son from SoftBank through DoorDash made about $8 billion. And now the retail investor is sitting there.
That minorly offsets their loss in WeWork, let's be honest, right? So it's a matter of where the public's appetite is. Some of these things, it's irrational exuberance, Marcus. It's completely out of control. I agree with you. They did just buy Caviar. There is competition in the space. Look, we're not going to restaurants now. So I think the story, it's kind of like a positive, perfect storm in a way, which leads to irrational exuberance. You've got people that are, for the next 6 months, are not going to be going to restaurants. They have, yes, there's Uber Eats, there's Seamless and Grubhub, and then there is DoorDash. So the sector is very pandemic friendly. We're going, look, and I agree with you, in 6 months when the world starts to open up, people start going back to restaurants, and this whole business model starts to fracture when people aren't doing takeout as much as they are now. Then we're going to look back at this and it could be trading at 90 or 40 or 50 and go, what are we doing here, right? So I think that it's important to note that as of March, the numbers coming out of TD Ameritrade and the Robinhoods of the world is seeing an 84% increase in retail investors. The float is super light. Let's be clear on this, right? 33 million was the issue. So you could really move this stock with 5,000 shares, right? So it was completely irrational exuberance. It was the flavor of the moment for the day. The IPO market is like, just buy it blindly. Stevie Wonder could have made money here on this deal this morning, right? Anybody could have blindly bought the stock. No off-color jokes intended. But it's just a matter of people are feeling that since March, and you're seeing young retail investors without a foundation in trading, buying things, hitting a button, and just watching them go up. So I think that's where you saw what happened here today. The way we watched the stock come in with absolutely huge buy interest with no sell side at all is where it took it. It did get to 200 on an indication, and then it was almost as if somebody just woke up and said, wait a minute, that's out of control, whether it was Goldman, the banker, or what, or who came in on the sell side. And then we saw it start to ratchet down almost to 170. The wonderness of this price discovery process, we see where the bodies lie, we see where the public interest is. I mean, if you open it correctly, right, as frothy as it was, if you open it correctly where the public interest lies, you're going to see a stock that trades correctly, and this one did. It never fell out of bed, even at this incredible valuation.
There's no question. You guys did a great job. Und ich meine, let me explain this. Ich meine, deshalb dauert das auch immer sehr lange, bis der Kurs geöffnet wird, weil der Makler dafür sorgen muss, dass ein Kurs gefunden wird, der in dem Verhältnis von Buy to Sell Orders in einem Einklang steht. Das haben die gut hingekriegt. You guys did a great job on that at the New York Stock Exchange. No question about that. But Tim here, I think, nailed it again and said like, look, DoorDash is a food delivery company. There is no big technological innovation behind that. It's a food delivery company. You got to keep that in mind. Now, I'll let you run. Just one quick word. Tonight is going to be the pricing of Airbnb. Tomorrow will be the IPO of Airbnb. Is this going to be another crazy one?
There's no question about it. Look, people have an appetite for the IPO market. I'm seeing it in the pre-IPO market where people are buying stocks. That's now another hot sector, right? People may not know that, but you've got early employees who are trying to raise cash because they've waited a while for their companies to go public, and we're seeing that the people, the investment community, has an incredible appetite. Yes, you are. It is once again a pandemic-friendly situation. When the world starts to open up again, and we don't have to rush, I have a couple more minutes, you're not going to see people rushing back to hotels. You're going to see people who are going to be able to start and travel when the airports and the airlines start to travel once again. You're going to be more comfortable within the pandemic mode, which is not going away right now. It's going to take months and months and quarters and halves of years before people get vaccinated. That if you go on a vacation, you will probably feel safer getting yourself an Airbnb that's been sanitized than getting to a hotel with elevators and rooms and this and that. So this is once again another pandemic-friendly stock. We've seen it with the Zooms of the world, the Wafers of the world, the Pelotons of the world. There are companies, besides the fact with the stimulus and whatnot that happened in March, you've seen companies Zoom, right, DocuSign. You've seen companies that have been able to redo their business model to be able to help us, right? It's not pandemic, but these people have really bobbed and weaved to be able to protect, and as did DoorDash, right? That's the bottom line. Let's be clear. We'd all be sitting at home with no delivery system for our food for the last 9 months, still hungry, waiting for that shrimp and lobster sauce.
But there is no doubt about that, Pete. I totally agree with you. Also natürlich hat uns DoorDash da auch sehr viel geholfen in den letzten Monaten. But at the same time, I mean, this growth, there was tremendous growth pulled forward. Yes, the fourth quarter and the first quarter might still be good for DoorDash, but boy, you're going to have tough comparisons starting in Q2 next year to keep up those growth rates, you know. But listen, last word to you.
Last word to me is that, you know, it's sort of it's an altered reality. Let's think about where we are in our lives. We're sitting here with masks on the floor of the stock exchange. We're actually trying to keep some level of normalcy to the best of our ability. We're trying to create a new foundation and a new reality here on the floor with the markets and whatnot. I'm hoping it's super important to note for people to think, you know, that we're sitting here and the market is trading at these all-time record highs that is solely just crazy due to stimulus, due to new retail investors and whatnot. And I think it's important for us to note that the bottom line is my only hope is that the economy will catch up with the market, right? The market is pricing in things to start to become some level of normalcy in Q2 and Q3. We're seeing it we saw a rally in the airlines today with the news coming out of the dissemination of the vaccine. I think it's important that we get a stimulus package. I'm hopeful that the people who need it get a lifeline. But for today, in this microcosm that we're living, you and me, in this financial marketplace at the stock exchange, the greatest institution in the world, it was a bit of irrational exuberance, but it was real. These were real dollars going to work. I agree with you. In 6 months to reevaluate this as a long-term investment, it's going to be troublesome, right? So I'm begging people to note, because we've seen with the Robin Hoods of the world too, that people are buying things on the way up, thinking that things will never go down. It's just going to keep going that way. And we're going to get to a point in our lives when we're starting to open up again and there'll be some level of normalcy where Zoom going from 30 to 300 and Wayfair going from 40 to 350 and Peloton going from 20 to 125, where these stocks that have been part of this irrational exuberance are going to have to consolidate, hunker down, and realize that they need to support that pricing when things get back to normal. We are living in a world of madness.
Yeah,
so
of course.
People see this, enjoy the excitement, but be clear, as a long-term investment, a lot of these stocks that they've been buying blindly and making money on may not stay that way. So
well,
they should always protect their investment.
Yeah, you have to know the risk that you're entering, and I don't know, DoorDash, a long-term investment. The future will tell. One quick explanation. You're wearing a mask on the trading floor of the New York Stock Exchange. A few people saying, why don't you take the mask off? Well, you can't take the mask off. Maybe you want to elaborate.
I think, look, I've had COVID. I've lived through this hell for 8 months. People seem to think if you're old, you're dying, you're young, you get better. Let me be clear to people that this disease is the gift that keeps on giving. I am still suffering from long-term COVID stuff. The United States is in deep, deep trouble with spikes and whatnot. We are trying to keep this place open. And in order to do that, I need to mention this, that today, and I'll show this if I can, that we have dividers. We've got plexiglass. We've got infrared temperatures being taken. We are being tested on an ongoing basis in order to keep this community with the open outcry. People know us as the people who scream and yell on top of each other, whether they watch the Wall Street movie or Wolves of Wall Street or whatever. That's our community. And obviously that is in jeopardy when you've got the virus that's so easily spread. So they are really strict here. They're keeping this open. People need access to their money. We saw in March when we closed, the markets didn't close, but the floors closed. And the investment community missed us. They showed us how relevant the human element is here on the floor. So we're doing everything in our power to keep the footprint light as long as the virus is spreading, right, to be able to give the people what they want in an IPO like today. There's a lot of money been made, a lot of fun had. Price discovery was great. You know, you get to be with me, I get to be with you, and we get to talk about this. And if we don't keep the mask on and try and get control of this virus, let's talk about economy for 1 second. The reason the economy was trading where it was on February 12th is because we had a healthy consumer, right? You had a healthy balance sheet of the banks. February 12th, before the virus hit, the markets were trading at records. We've blown through those records. But the bottom line, until we get a healthy consumer and a handle on all that, right, the economy will never rebound. And eventually, I'm not sure who's going to catch up with who here.
Okay, so this is a whole show to itself. I think that many aspects of the consumer are doing quite well. The real estate market is doing phenomenal. I think the fiscal policy did a hell of a job getting the economy on track, and I think we will all be very surprised, leaving the fourth quarter and the first quarter aside, how fast the American economy will be back to pre-COVID levels. It's going to be interesting. I'm sorry, what?
From your mouth to God's ears, I hope so too.
Hallelujah. All we can do is talk about the future. My friend, I'd say thank you very much, and can't wait to see you live again, and have a wonderful evening. Thank you for joining us.
Thank you for having me. See you soon.
See ya. So, ich möchte jetzt ganz kurz die Gelegenheit nochmal nutzen und über Facebook zu sprechen. Wir hatten ja heute Nachmittag diese Mitteilung, dass Facebook eine Klage bekommen hat von 48 Generalstaatsanwälten hier in den Vereinigten Staaten und von der amerikanischen Wettbewerbsbehörde. Und ich möchte das ganz kurz nochmal einordnen. Man liest also, dass Facebook vorgeworfen wird, illegal ein Monopol aufgebaut zu haben, und insbesondere die Wettbewerbsbehörde, die FTC, fordert also, dass Instagram und WhatsApp wieder quasi rückabgewickelt werden, ausgegliedert werden von Facebook. Die Aktie also schwächer. Jetzt gibt es ein paar Sachen, die wichtig sind. Punkt 1, dass diese beiden Klagen eingereicht werden. Darüber haben wir tagelang berichtet. Das ist insofern erstmal keine Überraschung. Der zweite Faktor ist, dass das, was hier gefordert wird, bei weitem nicht so leicht umzusetzen ist, wie vielleicht die Schlagzeilen signalisieren. Man kriegt erstmal einen Schreck und sagt, oh, große Klagen, das ist eine ernste Nummer. Aber erstmal, solche Klagen ziehen sich sehr, sehr lange hin. Und die Frage ist, ob diese Klagen, wie die Erfolgsaussichten tatsächlich stehen. Schauen wir uns mal die verschiedenen Perspektiven an. Punkt 1. Als Facebook Instagram gekauft hat, im Jahr 2012 war es, glaube ich, hat man $1 Milliarde bezahlt für damals 50 Millionen Nutzer. Man hat also keinen großen Wettbewerber aufgekauft, man hat ein kleineres Unternehmen aufgebaut. Und mit der Macht, die Facebook hat, auch dem Kapital und der Nutzerbasis von Facebook, hat man Instagram jetzt zu einer Plattform ausgebaut mit über 1 Milliarde Nutzer. Damals hat die amerikanische Wettbewerbsbehörde mit diesem Deal kein Problem gehabt. Jetzt blickt man zurück und sagt, jetzt haben wir doch ein Problem damit, müsste rückabwickeln. Das halte ich für schwierig. Auch dieses Argument der Wettbewerbssituation, Snap All-Time-High Twitter, die Aktien laufen, das Unternehmen auch, TikTok läuft. Wir haben durchaus auch einen gesunden Wettbewerb. Und damit will ich nicht sagen, dass alles das, was Facebook macht, fantastisch ist. Bei weitem nicht. Der Vorwurf, dass Facebook gezielt potenzielle Wettbewerber quasi raussucht, um diese Wettbewerber dann entweder durch aggressive Angebote aufzukaufen oder eben auf andere Art und Weise zu zerquetschen, den Wettbewerb im Prinzip einzufrieren. Das geht natürlich nicht, keine Frage. Aber ob diese Klagen eben wie groß die Erfolgsaussichten sind, halten sich, finde ich, hier doch sehr stark in Grenzen. Und jetzt mal gedacht als Börsianer. Facebooks Business brummt. Das Werbegeschäft dürfte jetzt auch wieder sehr gut ausfallen. Nehmen wir mal an, Facebook muss Instagram oder WhatsApp ausgliedern. Das wirft immer noch die Frage auf, ob diese Unternehmen ausgegliedert vielleicht sogar mehr wert sind als heute in der Gesamtheit mit Facebook. Deshalb darf man hier nicht zu emotional reagieren auf einer solchen Headline, sondern man muss sich hier Zeit lassen, das Ganze erstmal sacken lassen, genau analysieren, bevor man letztendlich gesehen irgendwelche schnellen Entscheidungen aus dem Bauch trifft. Im Übrigen geht man davon aus, dass bei Alphabet in der kommenden Woche auch eine weitere Wettbewerbsklage bekommen wird. Ja. So, jetzt mache ich mal Schluss. Ich sage vielen Dank. War heute wirklich wahnsinnig viel los. Meine Meinung zu DoorDash ist klar. Bewertungstechnisch macht das überhaupt keinen Sinn. Man muss bedenken, dass Grubhub auch die Gebühren gerade neu verhandelt mit den Restaurants. Niedrigere Gebühren zu zahlen, das kann natürlich auch DoorDash dann treffen. Und nochmals, ich habe es in den letzten 2 Tagen oft gesagt, das Umsatzwachstum von DoorDash in diesem Jahr dürfte 226% sein. Das ist wuchtig und das 4. Quartal mit den hohen Covid-Zahlen, das 1. Quartal könnte auch noch sehr gut ausfallen, aber D.A. Davidson, kleineres Brokerhaus, geht davon aus, dass wir im kommenden Jahr nur noch ein Umsatzwachstum von 58% haben und 2022 von knapp 21%. Das Wachstum ist immer noch hoch, lässt aber erheblich nach und die Bewertung für meinen Geschmack ist jenseits von Gut und Böse. Das ist ein Momentumwert, das ist ein Zockerwert, das ist ein Casino-Wert. Damit kann man, und da hat Pete recht, auch viel Spaß haben. Für Trading bei den großen Swings mag das eine gute Angelegenheit sein. Für mich, als wenn man langfristig denkt, ich würde die Aktie jedenfalls heute auf dem Niveau nicht anfassen wollen. In diesem Sinne wünsche ich jetzt einen schönen Abend. Das war es auch für mich. Ich wünsche euch eine gute Nacht. Wir sehen uns morgen wieder. Bis dann. Ciao.
Und jetzt der obligatorische und BaFin-sichere Risikohinweis von Mr. Markus Koch.
Meine Damen und Herren, liebe Aufsichtsbehörden, ich darf Sie darauf hinweisen, dass die Inhalte in diesem Video ausschließlich der allgemeinen Information dienen und keiner Empfehlungen zum Erwerb oder der Veräußerung bestimmter Finanzinstrumente und somit keine Anlageberatung darstellen. Insbesondere können Wall Street Correspondent und der Vortragende, das ist dieser Mann hier, nicht einschätzen, inwiefern die im Video gemachten Empfehlungen ihren Anlagezielen, ihrer Risikobereitschaft und Verlusttragfähigkeit entsprechen. Wer also auf Basis von Informationen in diesem Video etwaige Anlageentscheidungen trifft, trifft diese ausschließlich auf eigene Verantwortung und eigene Gefahr. Und das wiederum bedeutet, dass weder Wall Street Correspondent noch der Vortragende, das ist immer noch dieser Mann hier, für Verluste haften, die sie dadurch erleiden, dass sie Anlageentscheidungen aufgrund von Informationen oder Kommentaren in diesem Video getroffen haben. Vielen Dank für die Aufmerksamkeit und weiterhin einen erfolgreichen Handelstag.
Quack.